Hello, my name's Philip Hart from Financial Index. Welcome to today's video presentation. Today we're going to take you through the 2012 federal budget and how we see things going forward. It's a little bit ironic that 100 years after the sinking of the Titanic, when she ran into an iceberg and suffered catastrophic leaks to the starboard side, that our federal government is making a habit of leaking most of the important document surrounding the federal budget prior to budget night. Despite the leaks, however, the federal budget did highlight the strong position that the Australian economy continues to occupy in comparison to the rest of the world. I'll start my slide presentation today with some reasons for our strong economy, driven fundamentally by the mining sector. China, currently from an industry point of view, has 19% of the world's population, but consumes 53% of the world's cement, 48% of the world's iron ore, 47% of the coal, and the vast majority of every other major commodity. In 2010, China produced 11 times more steel than the United States. Looking at automobiles, China made 18 million vehicles in 2010 and thus setting a new record. In agriculture, there are more pigs in China than the next 43 pork-producing nations combined. From a transport perspective, China currently has the world's largest high-speed rail network and the world's fastest train. China is currently the #1 producer in the world of wind and solar power, but don't use it themselves. They manufacture 80% of the world's solar panels, but they install less than 5% in their own country. And they build new coal-powered fire stations every week. In fact, in 1 year, they'll turn on more new power than the total output of Australia. China controls more than 90% of the global supply of rare earth elements. In the past 15 years, China moved from 14th position to 2nd position in the world's published scientific journals. China now possesses the fastest supercomputer on the entire globe. At the end of March 2011, China accumulated US $3.04 trillion in foreign currency reserves. They are the largest stockpiler on the entire globe of currency. China consume 50,000 cigarettes every second. They are already the largest carbon dioxide emitter, and their output will rise 70% by 2020. So you can see China is a major input into why the current Australian economy is doing so well. Without the mining sector, we wouldn't have funds to be able to pay the various consumption needs of the everyday Australian. And these guys think that they can save the planet with their carbon tax. But let's not get political. Let's talk about the federal budget and the raft of measures that have been designed to spread the benefits of the mining boom and subsequently generate a surplus of $1.5 billion in the next financial year. Measures are principally targeted around the high income earners. You might call it the Robin Hood budget. The increase in superannuation guarantee contribution to 12% finally appears to be locked in. However, there are other changes to superannuation and managed investments trust which are disappointing, and they reinforce the growing sense of legislative uncertainty among investors. Where does the money come from? The revenue for 2012-13, income tax will contribute $163 billion. Company and resource taxes, $82.4 billion. Sales taxes, $51.7 billion. Petroleum excise, $17 billion. And other, $62.2 billion, giving Australia a total revenue of $376.3 billion. On the other side of the ledger is the expenses. Between health, education, public services, defence, social security, welfare and other, Australia will output $376.1 billion. The difference between the two is the surplus, estimated to be approximately $1.5 billion for the 2012-13 year. Now, if we bring that back down to what does it really mean from a budget figures perspective, the deficit is expected to be $44.4 billion this year. Next year, that's a surplus of $1.2 billion. Break that down a little bit further into household. If you've got a family income with a taxable income, after-tax income of $50,000, last year you went out and borrowed $6,000 extra on your home loan in order to make ends meet. Next year, you're going to go out and save $200 worth of your income, but you still have the loan to pay back. So what that means in Australia terms is that the total GDP, or the total income of the country, is $1.5 trillion. $67,000 for every man, woman and child. The government debt is $190 billion. So that means the mortgage of the country is $190 billion, which is about 20% of the income that we bring in, the fifth largest or fifth highest in the world. Onto the measures within the federal budget: superannuation, return of the superannuation surcharge for high income earners only. So it only applies if you're earning over $300,000 per year. Deferral of higher contribution caps for over 50s, other tax changes impacting superannuation funds, and the superstream legislation, which is a temporary tax levy on APRA-regulated superannuation funds. But we have some further details as we progress through this presentation. Managed investment trusts will increase the final withholding tax rate. No 50% discount on interest income, which was put into the budget last year. It's turned around. And eligible termination payment tax offset changes. Again, that applies to high income earners. As I said earlier, this is a Robin Hood budget and it affects the wealthier in the country. Other measures: there'll be a tax loss carryback rules for companies that have made tax losses in previous years to be able to offset those. The government has decided to scrap the tax breaks specifically on green building programs, and the future of financial advice will be an increase in funds provided to ASIC to implement. Financial Index fully supports these changes, but makes our clients aware that they come at a cost, which will be through the regulators. Superannuation. The increased contribution tax for high income earners includes all income, taxable income, concessional superannuation contributions, adjusted fringe benefits, total investments, foreign investment income, government pensions, less any child support type payments. So it covers everything, but again, you have to be earning over $300,000 a year for that to affect you in any way. Contribution caps for over 50s. Concessional contribution cap of $25,000 applies to all individuals. This will start from July 2012 till the 30th of June 2014. So currently there's a contribution cap of up to $50,000 for people with less than $500,000 in the superannuation fund. This is to be deferred until the 1st of July 2014. So until then, the maximum that anyone can put into their superannuation account will be $25,000. Discount for interest income. The government will not proceed with its 2010-2011 budget measure of a 50% discount for interest income. This reflects concerns with the complexity of calculating the discount in interest and its overall effectiveness. We're not sure that it will actually come back. Eligible termination payments. From the 1st of July 2012, the availability of the eligible termination tax offset will be limited. If your eligible termination payment is more than $180,000, you will not be eligible for the eligible termination payment tax offset. Amounts above this whole of income cap will be taxed at your marginal rates. Existing arrangements will be retained for certain eligible termination payments, however. New tax rates. The table before you now shows the current thresholds and the proposed future thresholds. You can currently earn up to $6,000 before you pay tax. In 2012-13, that rises to $18,200, and the following year, $19,400. The table illustrates each particular threshold point, and you can work out from there where you fall into the picture. There's been some changes to the health insurance rebate. we suggest that you contact your health insurer to see if those changes have affected you. In some cases, it will be better to pay your health insurance prior to the 30th of June to maximise your rebate entitlement. Family and Social Security wraps up the budget. School Kids Bonus replaces the education tax refund, a new income support supplement, increased liquid assets tests, aged care measures, a new disability insurance scheme has been proposed, and support for mature age job seekers. If any of these things affect you, please have no hesitation in contacting your financial index advisor. We're more than happy to assist you. Thank you for tuning in to our broadcast today. We hope that this helps you and gives some clarity around the 2012 federal budget. If you have any queries though, please have no hesitation in contacting your advisor or your local financial index office. Thank you.